Put below the market limit orders into a stock or stocks that you like, providing you have the cash set aside to do this. And I don't mean take a stock that's at 100 that you really like a lot and maybe put a limit order in to say, oh, I'll buy it if it goes to 99. I want to give you an example. I'm going to take a look at Alphabet, which you may know as Google. Google closed at $2,200. And let's say you missed it, you like the stock, they had a great earnings report, they've got a number of levers to pull, in particular self-driving, YouTube, the advertising market is expected to continue to improve, their search business continues to dominate. So let's say you think Google is a great company, put a limit order in for a Google, for example, at $1,700. It could go down that much. Is it likely? I don't think so, but it could. And when you put these below the market limit orders in the stocks that you like, what happens is you start to root for the stocks to go down. You start to cheer when they get closer to your buy price because you're getting a bargain. That's the idea. So maybe do this with a couple of different stocks and spread it around, whatever stocks you like. But when you put in these much lower limit orders, I'm talking like 20, 30, 40% drops in stocks, you will actually watch what happens with a lot less anxiety and a lot more cheer to see if you get hit on these, what you feel are great companies.